All right, so welcome back into the new year, and today we're going to dive into some tech trends, but also how crypto is going to be connecting the dots around technology and a lot of the innovation that we might see happen in 2023. This will be a good one. I think you guys will like this. It'll break down a lot of things that hopefully you like around TechPath. My name is Paul Barron. Welcome back into TechPath. Let's get into it today. And when we look at technology, one of the core technology architectures within crypto obviously is Bitcoin mining. And so we always love to bring our Bitcoin mining expert onto the show to break down a lot of these kind of things. So I want to welcome Sue Ennis from Hut 8. Great to have you back in.
Good afternoon, everybody. Happy New Year, and really excited to get into it today. Lots of exciting stuff to cover for 2023 and review about 2022.
Yeah, it's an interesting. I'm glad 22 is over. I mean, I think everybody is like good riddance. Rush that one right off. But at the same time, I think it taught us a lot in the essence of not only how to build businesses in crypto, how to build businesses around Bitcoin, and how to really understand the evolution of macro pressure on where the markets are going. When you look at that, Sue, I wanted to bring up a chart here that we've been showing this throughout the week last week, and I'm always impressed with watching how miners respond to certain market conditions. And this was a breakdown January 1st to November 30th. Obviously, we know what's going on with Core Scientific, in the bankruptcy scenario, but you got Riot in here. And if you'll notice, it's Bitcoin mined, sold, and then reserve balance. Riot selling a little bit, obviously reserve balance decent, Bitfarm selling a lot, and then Marathon not selling so much, and the same with you guys, Hut 8 not selling so much, but having a tremendous reserve balance. And if you look at this and you look at the outlook for Bitcoin specifically, miners always are at the kind of the genesis of where the activity begins. What are you guys planning for in 2023 right now in terms of, your Bitcoin stash, but also the strategies that Hut 8 is looking to implement?
Yeah, so I think, just to quickly go back to 2022, it was definitely a year of learning, I think, for all of us in the industry. It was a year that was focused on how to build resiliency, be adaptable, and learn how to pivot in a bear market. We do think that the majority of the pain has happened. We have seen some of our peers file for bankruptcy, which has been, very hard to see. And bankruptcies are often very long and painful processes. But we do think that the bulk of the pain has happened. We've seen a lot of our peers, for example, Bitfarms and Iris, pay down some of their debt loads. Hut has continued to maintain a relatively low debt profile. And then in terms of actual Bitcoin HODL reserves and strategy, we do think for 2023 that we're going to see a little bit more of a thoughtful treasury management strategy, whether it be writing, using derivative strategies, even things like looking at potentially hedging energy in a more thoughtful way, employing energy derivative strategies. I think just in general, more thoughtful and creative treasury management and energy strategies are what we're going to see in 2023 and moving forward in the mining industry. We think we're also going to see quite a bit of consolidation. There's still a little bit more consolidation to happen, but we think that for the most part, most of the pain has been felt and that it's only upwards from here. And Hut, publicly, we've been very transparent about, we do plan on continuing to hodl our Bitcoin, but grow our lines of fiat-based revenue so that we can keep our hodl going, so that we can fund that hodl business. And again, also inorganic M&A, which I've talked about on the show before. Again, we're really looking forward to 2023.
I think that's the one key element that I take away when I always talk to you is understanding the diversity and also the ability to kind of create a much more healthy approach toward business. Because in many cases in crypto, as you know, and we all know, watching how some of these crypto companies are built, sometimes your trade lines get so narrow and that it can put you in such a great risk because you don't have diversity and a balanced portfolio, both from business lines, but also the investment strategies and even the business strategies to kind of grow the business going forward. So I always love that about Hut 8 when I talk to you, because I feel like you guys have a really good handle on that. When you think about that in the sense of not being so focused. And we look at what happened with Michael Saylor and MicroStrategy this week, most recently. I think a lot of people felt that Saylor kind of did him a little bit of a low blow in the sense of, hey, he sold some Bitcoin. And it was one of the things that he had kind of just said publicly, I'm never selling Bitcoin. Nothing can, pull it from my cold dead hand. But when you look at that, some of it, and we all know why, it was a tax strategy, which I don't have a problem with. I think that's smart business in general. But at the same time, I think a lot of people would look at it. Why wouldn't, say, a Hut 8 go out and sell Bitcoin for a tax loss harvesting strategy? Or companies that also could have done this, why do you think they didn't?
Well, I think because Saylor's business is fundamentally incredibly different than the mining business, right? So the mining industry as a whole has seen tremendous losses across the board. Again, I cannot speak for Hut or talk about any sort of non-public publicly available information. But I can certainly say across the board, miners have seen losses of, upwards of 90%. So that's already a tremendous amount of losses that can be put towards past gains and also future gains. And in Canada, where we are headquartered and a lot of our peers are, there are different rules than in the US with respect to superficial loss selling and sometimes it's allowed. And again, the tax authorities here may have looked at that differently than perhaps how it would have been viewed in the US. So that's sort of the best I can surmise here about sort of why we haven't seen Canadian miners do that yet, or really many miners at all do it in the industry.
Yeah, I was looking at, speaking of that, I wanted to show this tweet right here. This was Jamie Leverton, your CEO, regularly promoted their strategy of balance sheet first approach. And when you look at that, I mean, you guys look really healthy here in comparison. If you look at liabilities compared to some of the others that are out there, including Riot and Marathon. So congrats to you guys. Kudos to you and your team and Jamie for really kind of understanding the metrics of how businesses are run in today's day and age. So always good to see healthy balance sheets, I think, in that kind of framework. With that being the case, and you also look at, let's say, Marathon or even Riot to a certain extent. I know you don't talk badly about these, but I'm just kind of curious when the sense of where we might actually see some selling of Bitcoin. Because if you go back to the original chart, let me see if I can pull it up again. This one right here, yeah. If you look at Riot, I mean, they sold a little bit, yes, but Marathon was pretty much solid on diamond hands, much like you guys. At some point, miners are going to have to sell something, just to be able to continue to maintain operations. Do you think that's going to happen more in 2023?
Well, I think miners certainly who do not already sell production and don't have any alternative lines of fiat-based revenue, yes, will be forced to sell. But what Marathon has actually done is they actually used their tremendous Bitcoin stack to take out a loan. So about 75% Bitcoin on balance sheet, they actually have taken out a loan against, which has helped them fund growth in operations. And I believe they do have something upwards of, forgive me if I may be incorrect about this, but anywhere from about 100 million still left in cash on the balance sheet because they were able to take out a loan against this stack. So it does speak to the benefit of having this asset on your balance sheet. Now, Hut, we have not included our stack so far. So again, I think Marathon actually has been quite smart with how they've used their stack. And again, I think they've still got about 25% that's not encumbered, which still gives them quite a bit of flexibility. Maybe they do have to sell some of that, but regardless, I think, let's say they did sell, they've got almost 10,000 Bitcoin on the balance sheet, 2,500 Bitcoin coming to the market would not cause a tremendous Bitcoin sell-off. That's not an Armageddon, four horsemen of the Bitcoin apocalypse event, right? So I don't think it's going to cause, if they do sell, any sort of real pressure on the BTC price. And I think it actually enabled them to have quite a bit of flexibility that they even have this asset on their balance sheet. So,
yeah, it is a strategy. Obviously, I think those are good strategies if you can get to cash at a point in terms of price, because obviously interest rate is going to play into it this year. A little different game and what we were dealing with even all the way back to early in the first quarter last year of where interest rates stood at that time versus what they're standing at right now, which I think will start to change some of that. Pressure also, when you look at the largest Bitcoin holders, this is one of the areas, because I'm looking at 2023 and I think, all right, Bitcoin been pretty solid, hasn't had tremendous downs, even though we have seen some pushes obviously down from the beginning of the year. But if you look at the large Bitcoin holders here, and I'm throwing out Satoshi, and now you get into the Winklevoss guys, a handful of unknown entities on the individual side. Then you get into the exchanges. You can kind of see those. Even the U.S. Department of Justice holding here, including the Bitfinex hack of 2016, unknown source also. But the ones that concern me, obviously, are Grayscale, sitting at the largest stack next to Satoshi. And then you've got Block One, and then also MicroStrategy setting in there as well. And these are the areas that I'm watching very closely, because this obviously could have real effect on what we might see in terms of the Bitcoin price plummeting in 2023. What are your thoughts on, because you think about it, look at that page. I want to just bring that back up, guys. Look at the amount of, I dare I say it, centralization of where Bitcoin is being held. And this is an area that does concern me right now. What are your thoughts on this kind of situation when you look at a market, especially like Bitcoin?
Listen, I will say I definitely have talked about some of the centralization risk that is inherent with respect to who's holding sort of the big balances of Bitcoin. And again, if 694,000 Bitcoin come to market and get sold, that's a lot different than, let's say, a marathon selling 2,500 Bitcoin.
Exactly.
And that could have a very meaningful impact on the price. But then I think where I go back to is we look at, where is adoption globally? Who is continuing to come to market with on-ramps so that more retail and institutions can get comfortable with this asset class, get into this asset class. This is still an incredibly nascent asset class. We have yet to see Bitcoin capture 2 to 3% of gold's place in portfolios. So there's still a ton of upside and room, we think, for Bitcoin to be adopted and grow, and for, again, potential cohorts to be buying that Bitcoin if, let's say, MicroStrategy or Grayscale does have liquidation event. I think it was also incredibly bullish. If you look at over the holiday, Fidelity actually came to market with with a metaverse and NFT patent.
Yes.
That's incredibly bullish. Again, we talked about this last time I was on, how BlackRock is now offering their institutional clients the ability to trade crypto. So I think, again, on our end, we're still very bullish, even if there is a tremendous selling event, because the adoption and the on-ramps continue to accelerate. And we also were able to survive as an industry amidst this, the Bernie Madoff of crypto, the FTX scandal, right? So there's also another thing that I haven't talked about that much publicly, but something we did hear when we were at a couple of events in Dubai. And it was the conversation around the fragmentation between East and West as supply chains repatriate. And, the US is not comfortable with allowing China to perhaps use some of its technology. There was some conversations we were hearing about how if you have sort of an East versus West political, financial, technology sort of ecosystems, that there's going to be a need for a government agnostic, intermediary rail, payment rail that can sort of function between those two paradigms, and any sort of country in between that deals with the East and the West at the same time, aka perhaps it is a Bitcoin rail. So if that makes any sense. So that's just something that we were hearing when we were in the Middle East back in November in Dubai. We heard some really interesting economists talk about that. So my point is, this is my long-winded, TED talk on we're still very bullish on this asset class, and we think there's tons of opportunity moving forward.
What are your thoughts around innovation within Bitcoin itself? Obviously we see the Lightning Network and many of the things that are starting to implement around Lightning in general, but this has kind of been the knock on Bitcoin in general. If we are going to scale beyond a store of value, beyond digital gold or digital gold, the potential of where Bitcoin might go, are you seeing any kind of innovation that is really kind of knocking your socks off, saying this is really a game changer if we continue to see this kind of innovation develop?
I think, I mean, you hit the nail on the head, Lightning Network. The potential for a Lightning Network to be that payment rail that solves for the speed and the scalability issues that come with the core Bitcoin network are extraordinary. I think Jack Mallers is an incredible advocate in the Lightning Network space. And again, there's already something like 200 million users using the Bitcoin network today. And then if you add on that sort of, high speed rail on top of it, I think the opportunity is endless. So I think personally, it's a network that is the most exciting innovation on top.
I would love to get you guys this, because I know our listeners always have, an audience always has, innovators. You guys hit me on Twitter all the time about this. I'd love to know who your Bitcoin innovators are. We had Jeff Booth on not too long ago, and he had a whole line list of new innovators around Lightning and also other infrastructure models that could be being developed on the Bitcoin architecture, which could really start to set things up. But I'd love to get you guys' feedback. Make sure and drop in some comments below. And if you like these kind of interviews with Sue, make sure and smash the like button. Always helps the channel and helps us understand what you guys are interested in doing. I want to segue over to another topic, and that is talking about, if you look at AI, you look at data storage, you look at the aspect of what could be coming. You guys obviously have mentioned the potential for rendering as part of that. We'll talk about rendering momentarily. But I want to jump over to something that's happening right now with Arweave. And this is a project we've tracked here on the show for quite some time. And it's in our CPI, which is our power index. But I was even surprised at this the first time that I saw this. This is the Arweave ecosystem. And I want to kind of bring this up a little bit, guys, so you can kind of see some of the data points that they're really, so infrastructure is obviously lined up here, storage, which we know with Arweave, publishing, exchanges, analytics, developer tooling, incubators, and so on. Even social lined up nicely, which I think is going to be the data engine of the future. And you've got Instagram in here, Lens Protocol, obviously Meta's sitting over here as well. Arweave could be a very interesting play. When you look at data storage and what this could mean to companies like you guys, because you've talked about rendering and the ability of creating a lot of productivity around these kinds of technologies. What are your thoughts on how we're going to see, whether it's the metaverse, whether it is crypto and Web3 being stored in the future? What are your thoughts on projects like this one?
So just to back up a little bit, over the break, I was reading the economic outlook for Morgan Stanley, Goldman Sachs, BlackRock, Fidelity. And it was BlackRock that actually came up with a really interesting stat that there's actually a $15 trillion gap between existing and future infrastructure needed to meet digital and then also renewable energy transition. And then if you also look at the demand for cloud gaming market is expected to surpass 13.3 billion by 2028 and has a CAGR of about 42.5%. And then by 2030 is a projected growth rate in CAGR of about 58.75%. So those are tremendous growth rates. Huge opportunity. And every single one of those industries, again, that Arweave supports, and the industry that supports Arweave is the data infrastructure piece. It's the actual hardware, wires, transmitters that are actually supporting that compute that is needed to run those applications. That is obviously a piece of Hut 8's business that we're very bullish on, and we're also going to continue to grow. But outside of Hut 8, that is a very interesting piece that we're looking at, and that I think in general investors should be looking at over the next couple of years, about sort of what and who are those infrastructure providers that are going to be supporting that tremendous growth and opportunity.
Yeah, I always look at it in the essence of trying to identify the innovators early enough in not only their life cycle, but also in their development period. Because, in Silicon Valley, it was always the startups. It was always, the seed capital guys that were essentially building on blue sky before they really became a company. And I'm finding more and more of this starting to appear in the crypto sphere, and what we're seeing in blockchain and where Web3 might go. I want to jump to a clip here, because thinking about innovation, probably one of I would say, the best innovation trackers I've seen over the years has been Cathie Wood. I want to jump to this clip and
Yes.
play this of what Cathie had to say about this.
And we do think this rebound will be quite powerful. This year has been the most difficult year of my career, worse than 08-09, and I would venture to say that it has been the most difficult year of many investors' careers. The only thing that worked this year was energy. It's up almost 50%. And many people are asking us, why don't we diversify into energy since it's working? Well, the reason for that is we think it will stop working. If our forecasts for electric vehicles and autonomous taxi platforms are correct, then oil demand could drop by roughly 30%, 30 million barrels a day during.
All right, so the point I was getting at here with what Cathie had to say, obviously it was geared toward kind of electrification of vehicles, but the other aspect is the innovation layer that we're seeing overall. And what I mean by that is companies and projects that are starting to break into those old school tech. We'll think now you kind of look at energy, and they're starting to break down the doors. And those are the ones I'm watching for. Obviously, ARC and her team have been able to identify a lot of, whether it's in, bio to all the way down into some of these early innovation techs. When you think about that right now, I kind of put HUD 8 in that area because you guys have started to span out so much into all these new veins of business. What are you watching now more so than others for 2023, Sue?
Well, again, I think all of these new paradigms and businesses and applications that are being built on the current and also future of the web. And this includes AI, machine learning. Even if you look at all the developments that have happened with OpenAI and ChatGPT, again, not to keep beating this dead horse, all of that needs base layer metal support. It needs the compute support. And that's where we think the opportunity, at least for us, the biggest opportunity for us is, and where we're sort of, putting our flag and, our stake in the sand. But, in general, some of the innovation that I think is very interesting and what's going to be incredibly disruptive is this OpenAI and ChatGPT. And, how, even if you look at how is AI going to disrupt crypto trading algorithms, smart contract auditing. So I think that's the stuff that really excites me. Actually, I will be starting to take some courses this year just to go a little deeper into the AI and machine learning side, because I think that piece of innovation and then how it's going to layer on additional innovation into the crypto space, for example, is really, really interesting.
This was a tweet from Meta because it kind of segues into what you're talking about, and it's talking about deep learning vision systems that can fail opposed to their idea of background lighting, and their work on ImageNetX, which is one of the first large-scale efforts to look at things like this around AI computer vision, which again, back to the point that this kind of targets at the potential of use case around things like ChatGPT, but from an AI computer vision standpoint, but also from the aspect of, even if you just look at the tool sets that Dojo is trying to do with Tesla, the amount of data cataloging that they're doing to be able to kind of study computer vision and what that might look like in the future. So there's a lot there, and it goes back to what you're talking about. All of this needs data centers, and it has to have some sort of continuity at some point with Web3, which is where I think the kind of the connection of the dots will really start to play into the future. Go ahead.
I was just going to say, what I think is also really interesting, how AI could potentially solve for some of the issues that we're seeing right now with, let's say, in the Ethereum ecosystem with bridging technology. So yes. 2022, we saw Ronin and the wormhole hacks. Well, there's some AI algos that are being designed to identify those areas of vulnerability so that we can solve for some of the bridging problems with respect to in Ethereum. And so again, those are the pieces that I think are really exciting and that I hope we see more development on in 2023.
Yeah, for sure. To blow your mind, guys, I want to just show you this stat right here. 3D rendering market size, they're estimating worth around 20 billion by 2030. Billion. And this is again, all new. And if you look at, I'm going to kind of zoom in on this. This is the global 3D rendering market size between 2018 and 2030. And you can kind of see, look at where we are right now early on, 22, nice little certain amount of growth, but no real acceleration. But the likelihood is seeing some massive moves in global 3D rendering products, which is really going to start to lean into projects like what we've talked about here before in the essence of render and so on. If you look at just Avatar, and the movie just came out here recently, this was on the Amazon Web Services. And again, this to me starts to open up a lot of opportunity around how Web3 and also how content might play into the future around global rendering services. And again, that goes back to your strengths, Sue, with what Hut 8 is doing. Do you guys see this as like a new cornerstone for Hut 8? Because I feel like rendering is just a minute away from really exploding.
Yeah, absolutely. Because it also ties into the cloud gaming space as well, right? Which we talked about has a CAGR of 42.5%. That includes render and digital render for some of those in-game experiences. So, we're incredibly bullish on it. We think there's a tremendous amount of growth. 10% of our customers already, it's about 10% in our data centers already are in the special effects space out of Vancouver, because there's a lot of production and movie house production that goes on in that part of Canada. But for sure, it's in the cloud gaming space where we see some really significant potential drivers, again, using render technology. And yeah, it's pretty exciting.
Big deal. Just a quick clip here, and then we'll wrap up here on a couple of questions in our poll. But I wanted to play this NVIDIA. This was the CES clip that you guys really need to listen in on.
NVIDIA Omniverse Avatar Cloud Engine, also known as ACE, opens a new world of possibilities for bringing avatars to life. By combining the realistic tones of NVIDIA Reva's speech AI with the lifelike expressions and gestures from animation AI like audio to face, creating the next generation of digital interaction has never been easier.
ACE lets you breathe life into a wide range of avatars, from 2D portraits driven by your own video,
and 3D characters from top avatar creation platforms like Ready Player Me.
ACE.
So you can kind of see, the advancement of this technology is moving at lightning speed right now. And the opportunities, I think we don't even know really the opportunities that are going to be presented in maybe the next 12 months around rendering, how this integrates into all sorts of content development as well as GameFi, etc., that really plays into the future of where this is going. How big do you think those market numbers are right around rendering? They were talking about, I think, what was it, 30 billion or something? Let's take a look. Yeah, right
absolutely.
Here. You think that we could see 20 billion by 2030? That's a massive market position.
Yeah, that's a massive market position, but it trends. If you look at the cloud, sorry, my dog, apologies. If the cloud gaming space is projected to be worth 22.5 billion, and that's cloud gaming alone by 2030, those numbers are on trend, and do the math, because that's just cloud gaming alone. So that's not even including like the special effects industry and all that. So.
Well, I think your dogs agree as well. They were yes.
She's my nice girl. Irene, she's my nice girl. She's real fired up about render.
Yeah, I like it. I hear it. Maybe that's a good sign for sure. Hey, let's jump into the poll real quick and take a look at what's happening over there on the poll. All right, which tech computing trend will prove to be the best investment in 2023? So it looks like we have cloud storage coming in at 19. That's Arweave. Then you look at AI. That could be Tesla, Meta. And then Bitcoin is going to outperform everything this year, according to our audience. So we'll see how
I think AI number one and then Bitcoin number two. I actually do think, and that's just Sue, that's not Hut 8 prediction. I personally think the AI is a bigger opportunity, but that Bitcoin's a close.
Yeah, for sure. Interesting. I think this is always fun. With you, Sue, and thanks a lot for stopping in today. We definitely want to get you guys back on the show as much as we can. So here's to a good 2023 for you. Good luck over there.
Thank you for having me. Love you guys. See you soon.
See you soon. All right, guys, you guys are wrapping up. We're going to be doing our 3 o'clock live stream today. Make sure and jump in on that. We're going to be talking about trends for 2023, mainly some of the crypto trends. And there are a lot to talk about, everything from NFTs, where smart contracts might be going, what DeFi might look like. All of that, we're going to be breaking that down at 3 o'clock. And we'll be talking a lot about Bitcoin innovation as well. So you don't want to miss that one. If you're not part of the Diamond Circle, make sure and jump in. It's really easy. And it's free. All you guys have to do is hit the link below and then join in. It's simple. Just your email. We drop a couple to you guys each week. And it's a great place to really kind of energize your building around community. And I think that's one of the big things that is really going to help crypto, at least in 2023. If you want to catch me, it is out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.